Today is the 13th of August, 2026, 10 a.m. CET and 4 p.m. Manila time. Today we talk about Fitch flagging youth unrest in India, South Korea and Taiwan surpassing Japan exports, mega IPOs on the spotlight, and an autumn of political earthquakes in Europe. Hello to our listeners. I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgreen, the founding CEO of Lundgreen's Capital.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgreen's Investor Insights. Join us as we analyze developments in major economies and financial markets globally.
Hello, Mel. How are you today? How's this week going so
Hi,
far?
Peter. Yes, it is the start of Ghost Month, apparently. So we're not spooked, although we are going through heavy rains here in Manila. But the more exciting thing that we'd like to share is that it's our upcoming China quarterly webinar, which is scheduled next Wednesday. So a lot of our works focused on that, preparations and of course invitations. So maybe our listeners would also want to join us in discussing the quarterly developments in the Chinese equity markets. That will be on the 19th. That's next Wednesday at 9 p.m. Manila time, 9 a.m. New York time, and of course 3 p.m. CET. So that's really where our energies are mostly focused at. But of course, we always keep an eye out on major developments in the market, as we always do. How about you, Peter? What have you been up to?
Yeah, it's busy, and that's good. We're happy, and also yes, I'm looking forward to the China webinar, the quarterly China webinar, and we should mention it is our award-winning China fund that is hosting. But it is also to talk China, of course,
Mhm.
and actually some AI as well there. So it's always exciting. Looking forward to that. We will also touch a bit of AI today. It is
Yeah.
simply so big and getting bigger, even bigger also in the financial markets, in the stock market. So simply an interesting theme to keep talking a bit about. So, we will start a bit different today.
Yes.
Not necessarily straight into the AI stocks, but we will start in India. Let's have a focus there because it's also extremely interesting what's going on in one of the biggest countries in the world.
I've had my eye on this topic for quite a while. So, since early or mid-June, there has been this cockroach party movement in
Yeah.
India, and it does sound dirty, it does sound satirical until suddenly it wasn't. Just a while back, there was this whole controversy in India where um, a chief justice from the Supreme Court or whichever equivalent they call it in India referred to the youth, the unemployed youth, as like cockroaches in the system, and that angered many. And that led to an online movement that turned into street protests in the last 2 months and ongoing. It's been quite getting more aggressive that police are running into them when in violent clashes. For a while, it's been, kind of very solely political until very recently when it ended up in the credit rating analysis of Fitch Ratings on the Indian
Mhm.
market. So they
Uh-huh.
did keep India at triple B negative. That's been their credit rating for the last 20 years. But they
Uh-huh.
did say that yes, there is robust GDP growth in India. We do see that as well, above 7% over the last year. But they already raised alarm on youth unrest and its potential cost, as far as,
Mhm.
of course, apart from reputation and political security, it's also about fiscal um, balance or fiscal health of India, because it is indicative of some problems in the Indian economy. Youth unemployment is very high, relatively high in India than anywhere else. A quarter of the population is 15 to 29 years old, and of people that have graduated college,
Mhm.
25 and under, they 40% of them cannot find work. So it's
Yeah.
that scale is scary. And you can imagine the real number it translates into if you have a 1.4 billion population. So
Mm.
that is a potential lingering source of unrest in the Indian uh, economy.
Yeah.
They are likely there is likely a bigger cost than what they see right now, because if you are unable to find work for these youth,
Mm.
that means you have to either subsidize them in some way, or they're simply not productive, at least in
Yeah.
the formal economy. And that is symptomatic of a larger, long-standing problem for India. But
Mm.
otherwise, if the GDP growth is this robust, you should be able to find something to bring them into the system, into the formal labor force. So that's the pressure on the Indian government, apart from, of course, ensuring that this unrest is addressed, not just by force or by brute force. You need to really
Yeah.
get to the root of the problem. And if something as formal or as financially, usually financially adept institution as Fitch would bring it up in their credit rating report on the country, it's really something that the government should, like, focus on. And not to say that they have to quell it, but they do have to address the bigger societal concerns in there, because it's not just about sending these people away from their protest actions or sending them home. It's about finding jobs for them, finding opportunities for them, because honestly, if they're jobless, they have nowhere to go, they have nowhere to be in. You have all these young people ready to fight, keep fighting. Literally, it's happening that they are getting into physical clashes with authorities, and you would not want that to escalate any further. So it's really something that we are looking at, as much as how rosy the numbers are as far as the
Mm.
Indian macroeconomy is concerned. We also take a look at this brewing problem.
There are actually some red flags. You call them, let's call them macro or structural red flags. Um, as you mentioned, now the rating agencies, they do observe what goes on. They are actually more observant on also society issues than maybe many investors realize. And the
Mhm.
key is when we talk about what is in S&P Standard and Poor's terms triple B minus is exactly the balance of being um, a junk bond or not as an investment grade is a triple
Yes.
B minus. If it drops down to what would be double B plus, then we are talking about junk bond status. It would be a catastrophe for India because the borrowing costs really soar a lot. So that alone is critical, but should also be mentioned that investors typically just need one credit rating, let's say, that is in the investment grade area. So because one rating agency lowers below the investment grade sort of threshold, that doesn't necessarily mean that in the investor market is seeing India as below the junk bond status. It
Mhm.
needs that all two or three leading rating agencies they are agree on the junk bond status. So it will take some time. There's actually
Mhm.
maneuver room for India to work around and to deal with it. But as you say, there are some structural issues as well. What is good about the young population in India is to keep very high GDP growth rates. A young population is needed because otherwise you can't have the ongoing expansion in the
Yes.
economy and simply in companies and getting more and more people into the labor market. So this is needed. That precondition is actually there. You mentioned also people are coming from college, they're getting more and more educated in India. But what has the Indian government tried to to try to capture also internationally is production line jobs. So there are some really, let's call them misses from the Indian government part. And this is bad, and there is a almost sort of a middle class trap here. The classical middle class trap is that the middle class grows so big
Mm-hmm.
that the growth can't move the middle class higher because that will, in terms of living conditions or whatever, yeah, because it will require so much growth that it's impossible. But this is actually already ahead. It's sort of
Mm-hmm.
they're not India is not able to lift this young generation into the middle class in India, and that's really a problem. And for those who remember, think back a few years back how the Indian stock market simply went straight up. That rise and that growth in the Indian stock market was so extreme that sort of on a macro level, it actually included the expectations that each and everybody up to 40 years old would be in the labor market working. And that is actually also women that should leave as a sort of the home status and go into the labor market. So on that macro sort
Mm-hmm.
of view, there might be some contraction into the stock market, sort of these structural reasons.
Yeah.
So, extremely interesting theme, Mel. I'm very convinced that we will need to revisit a bit, also the coming 6 months on that one.
Yeah.
Very important. It's India is a growing economy and attract a lot of investors. So there's something to look at here. Good. Other areas in Asia sort of moving really ahead.
Let's go to East Asia, Peter, where
Yeah.
it's known to be the tech leaders of the region, if not the
Mm.
world as well. A big shift is happening thanks to AI. So here we are with our AI discussion.
Yeah.
There is a report from Nikkei Asia that pegs numbers that now, the first time in a while, or maybe in history, exports by both South Korea and Taiwan have exceeded that of Japan in the first 6 months of 2026. We do know that Japan has been for so long the high tech leader in the region, but since the rapid rise of demand for AI chips, AI products, both South Korea and Taiwan have seen the lift. For the first half, Japan came in at $384 billion in exports. Both South Korea and Taiwan were over $400 billion. South
Hey.
Korea was actually at 496 billion, so very, very close to half a trillion dollars in terms of exports, and that is largely due to semiconductors, the chips, the powerful high grade chips that run AI systems, AI data centers. They're really leading the way there. This is not to say that Japan is contracting. Japan did notch a 10% year-on-year increase in exports for the period, but it's just so that South Korea and Taiwan both experienced a 50% year-on-year increase in exports. So that's really how much of a lift these chips are giving these countries. The key difference is that, yes, South Korea and Taiwan are home to the biggest memory chip makers. So that's really where the growth is.
Mm.
The difference is that Japan is actually in the game too, but what they're exporting are the manufacturing equipment for these chips. So, but it's easy to see, like if Japan exports, let's say, 100 machines that make these chips,
Mm.
these two other countries can churn out millions, billions of chip pieces in the same using the same machine. So that's really why the disparity is quite large. And 30% of these exports by South Korea and Taiwan are the chips. For Japan, it's just a 5% share. So
Uh,
that's really the where the value added is very, very different, and maybe would
mm.
make Japan think hey, maybe we can just make the chips ourselves as well. But then it's gonna be a tight, very, very tight race for them to even try to catch up because these big wigs are so far ahead. We know that
Yeah.
SK Hynix, Samsung, TSMC, these are the really big names in Taiwan, and it's just very, very hard to do. And recently, the weak yen is also another factor. With the weak yen, may be favorable for the domestic players or when they count their profits at home, it's making it difficult to count the exports in US dollar terms. So it's really not in the best position. Japan is really not in the best position for the global AI race right now. But of course, it's an exciting time. More
Mm.
competition would be better for the market, but let's see if how or when Japan can catch up significantly.
Yeah, it is. It is actually extremely difficult to enter the very high end AI chip market. Is not just to produce some chips.
Yeah,
This
very
is
niche.
yeah, it is. It's that is uh, yeah, it is simply just very difficult, and the demand is enormous. Yeah, as we have
Yes.
seen, we know, and that also leads to these extreme developments. Also, as you mentioned in sort of the trade
Mm-hmm.
from the countries who are in the game. That is it's impressive. It's moving a lot, and we're talking about big money that are getting moved and shifting hands very fast. To take it a bit into to what does that also actually mean into to the stock market. We have here from our side called on more IPOs sort of since last year, and we appreciate what is happening. But maybe even we are taken by surprise about the size of some of the IPOs, as in terms and when we look into to the total volume. The value of all the IPOs, it's really rising dramatically, but the number of IPOs is, I would say, still limited.
Yes.
And we have touched base now and then and on these things, but again, there are a couple of things out there that are worth to notice. We just have the in China again the unitary IPO that is coming. It has been oversubscribed 5,500 times.
Crazy
I'm
to
not,
hear. Yeah.
yeah, I am not sure in the past 40 years I've heard a higher number. Unitary is famous for its. Now we need to say it right. Yeah,
Yes.
humanoid
True.
robots, and not humanized because that is sort of equal to a person already. But human, we have decided we call it humanoid robot.
Yes.
But this is a company that produces robots that really can walk around. They can dance. They can box. They can do all kind of things. Yeah. Um, and they're heading towards its a valuation of 9 billion US dollar on the Shanghai exchange, and so that means it is predominantly domestic Chinese investors who are really jumping into this race. They are partially blocked to purchase US AI related stocks, and
Mm-hmm.
that, of course, alone generates a higher appetite for as of their own domestic Chinese stocks. It also rings a bell if we go some years back that we have seen Chinese tech stocks taking simply enormous increases and then collapsed also uh,
Definitely.
in big size. Yeah.
Yes.
Is this the same here as we are talking about a company measured on a historical PE?
Mm-hmm.
Now we haven't seen the forward. We've seen the forward calculated PEs yet, but the trailing historical measured on the revenue last year makes it 291 times PE, and yeah, we are in the high end. Let's put it this way. Yeah.
Mm-hmm.
But interesting to follow, and actually. This company is also feel the war between US, also the AI war between US and China, because some of the current versions of their humanoid robots are exported to US. But the coming more advanced versions might be blocked by US. Though they argue in the company they can simply sell it the whole production somewhere else in the world. And this is just where it starts to be also the product is interesting because now talking about having these kind of robots running around in the office and doing some assistance, whatever, as a
Hmm.
receptionist or tea ladies or even more doing the cleaning, whatever. I don't know, but highly interesting there.
Yeah.
And to stay in just in the Far Eastern market, as we have talked about the fast fashion maker Shein many
Yes.
times, and now it seems they are actually on the way to do an IPO. The impressive in my view is the size, as it has been able to generate such a size in a very short term.
Yes.
Now the valuation is indicated. Rumors are 30 billion US dollar, but
Hmm.
actually for 2 years, just 2 years back, it was in the private market valued about 100 million US dollar.
It's
100
rapid.
billion, sorry. But anyway, so if our company has managed to be valued at 30 billion US dollar, Mel, I would for surely ensure that
It's
there will
still
be
something to
10,000
celebrate for sure.
fire ice cream. So that is not to be neglected. That it's tremendous effort and what has been going on. The impressive there is the size. Actually, the profit margin last year dropped to 4.9%.
Hmm?
So if you look into all these kind of classical numbers, you would and judge a company, then ah, it's
You wouldn't
actually
like
stretching
it
a bit there. Yeah. But the size, what has been created, is impressive.
in such a short span as well.
Yeah. And if we jump to the other side of the
Hmm.
world, US, the rumors are now that the AI company Claude is on the way, and there might be a target of a 2 trillion US dollar valuation, 2,000 billion
Billion.
US dollar. Uh, okay, and you could say, is this AI and tech going crazy? I would say not, not
Hmm.
necessarily. During sort of our summer period, we have chosen two AI agents to help us with our own extreme big IT project that we are
Hmm.
working at. And these two AI agents, they will have a function
Hmm.
in the process, simply as employees. We are already so far with one of the AI agents that it was we
Than the
needed
other.
we needed to have a one-to-one conversation about who is running the company. So you have to tell
You
the,
have
the
a
AI
second
agent,
CEO.
you have to tell the AI agent if you want to stay on board, you need to adjust. And it's impressive. Anyway, and actually, I've seen Claude many times mentioned as a really high-end offer of AI agents, and we looked into um, as we do, of course, truckloads of PowerPoint presentations, and our graphical designer, she is the master behind them when we're looking at all the visualized stuff. And AI agent can't do that in the same
Yes.
style, the same quality as a human person can. But in our IT project, we need a PowerPoint presentation producing a AI agent, and it's actually quite difficult to find good ones. Where example, Claude is typical and also in our view in the top two or three, depending
Hmm.
on which kind of AI PowerPoint presentation agent we're looking for. Now, we did choose another one for different reasons, but we are not the only one having this consideration in the world. And if hundreds and millions of small enterprises are considering to have clothes in the top two or three or one or whatever
Mm-hmm.
for their needs, then we are talking about an extreme big business. And that actually just a small explanation on why is this simply uh,
Two
taking off.
trillion worth. Yeah.
So that one is of course for all investors who are looking to have AI in their portfolio.
Mm-hmm.
I think it will be extremely interesting, but probably not cheap.
Yes.
Yeah. Okay, lot of talk. We need to finalize and do a bit overtime today to finalize with Europe.
Yeah.
And it's actually, to be honest, also a bit of preview of one of the articles in the coming Global Quarterly magazine from Lundgreen, the
Yeah.
article covering EU, and that has a political sort of analyst angle. And there's a risk that there will be simply what I would call sort of a political earthquake in Europe this coming autumn. And I'm not so sure that the market and investors are ready for that. And it is a Franco-German, it is not a fight. It is going on in the two camps, the two most important countries in the European Union. We have extreme important budget negotiations in France. They are
Mm-hmm.
running ongoingly on a 5% deficit of GDP every year. It is completely irresponsible. It is. It should not take place. The responsible minister for the budget, he is trying to call to the politicians to say, okay, they need to behave
Rain
and
it
find
out.
yeah, fair budget for France. But we have the upcoming presidential election next spring in France, and the war between the right and left side in the French politics is so heavy. It is extreme, and they're willing to sacrifice whatever it takes to win. They will do only promises, and they will not care about the French budget and the deficit. But
Yeah.
investors, they do. And in particular, the fixed income market will take care and will be nervous. I think the budget once more could be sacrificed, and that will
Mm-hmm.
lead to nervousness among more nervousness. It is already there. It means that there is a credit spread for France will go up again, and it is already in this. France is so far now that the refinancing cost of the government debt is actually now severe, and it is a heavy burden for them.
Yes.
Again, at the same time, in Germany, several things could happen on the political scene. There are, and that is not, of course, not a secret,
Mm-hmm.
in leading, particular three leading provinces in the earlier Eastern Germany are elections for the local government in the province, and the German right wing, in particular in two government, provinces, but basically in all three governments, are in an extreme lead, simply in an extreme lead. Two of them, they might be able to take the majority themselves,
Mm-hmm.
or we will have a situation where they are shy of the majority, and
Yeah.
all the other parties will have to form a government, meaning that the conservative CDU will have to work together and form a government with the right left-wing party. And the prime political target for this left wing, the Die Linke party, is to generate affordable housing
Thanks.
for people again, but it is not a fancy structure. It is simply to take over, and that the government will take over real estate from real estate funds, as a meaning they'll
Mm-hmm.
take over all the flats that are rented out, that today is on private hand. And that is an outspoken target. Now, to get conservative CDU party members to buy in that one, I see as completely impossible. And then you
Mm-hmm.
can say, okay, then they leave it. But there might also be the discussion of saying, what is the most extreme? Is that more extreme than where the right-wing AfD is? It could come to an earthquake where there will be open up as a from a domestic political point of view, that is an earthquake, open up for some government or cooperation with the right wings. At the same time, what has not been on the radar screen in sort of internationally, uh, within the past week, 2 weeks, a movement within the SPD, the Social Democrats, that is a government partner in the current German government. This is a junior partner. There is a movement calling for a extraordinary uh, convention day this autumn. They simply want to have a shift, either in sort of as a
Yeah.
politics, or they want to have the SPD leadership to step down or to focus on either being leadership or part of as a ministers, whatever. They want a big shift within SPD, and that could lead to maybe
More.
even a breakup of the current German government. And that
Yeah.
is exactly at the same time where we have the elections going on in the eastern Germany. It can really spin out of control. We don't know, but it's a risk, and it is actually also it will worry the bond market, and it will
Yeah.
lead to even increased credit spread, even for Germany. These things are extremely, extremely interesting, and for people who are exposed to Germany and have an interest, and also have an interest in German domestic politics, this is worth to dive into. Extremely toxic. So, yeah, but we will also, as mentioned, spend a few lines in the coming quarterly magazine on exactly this year. Um,
Can't wait for that, Peter.
yeah. Otherwise, let's very fast jump to the global sunshine outlook, Mel. Are we still happy, or is it all rainy?
There is greater reasons to be nervous about the world, but of course, we do still see opportunities ahead. So there are clouds in the horizon, as we always say, but sunshine outlook prevails. That sunshine outlook is particularly strong for developing Asia. We have discussed some concerns recently politically, like in India, but there are still abundant sources of growth driving the region. We don't really see the same for the western part of the world, but we see opportunities there still.
We continue to overweight risk, but the good cases are fast forward moving.
Mm-hmm.
That's actually quite interesting. And we see the private sector is still pretty strong. Households are doing okay. We consider sunshine as sort of the overweight. And we are aware it's August, more volatility is possible, but in general, we are happy. So it's very stable. Thank you, Mel. Thank you for sharing all your insights. Thank you to the audience for listening. And yeah, we will be here next week again.
Thank you.
Thank you for tuning in. As always, we keep a watchful eye on market shakers and movers. Catch the next episode of Sound Economies with Mel and Peter, a podcast by Lundgreen's Investor Insights. Available on Spotify, YouTube, and wherever you listen to podcasts.
Lundgreen's Invest has secured a historic quadruple exit for its high-tech defense fund. Following the sale of 4 investments to the Danish defense company Omni Capabilities, the fund's value jumped by as much as 40% in just one day. The good news? This evergreen fund is officially open to new investors with an exit possibility every 6 months. Visit lundgreensinvest.com to know more about this co-investment opportunity.
Lundgreen's Capital has been in the business of investment advisory and wealth management for over a decade, with our high-performing and multi-awarded funds to show for it. We're taking this to the next level through an IPO in 2 years. Join us in this journey. Visit our website to learn more.